Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is, it's interesting because S&P is down 0.18% there. But you can see that we do see the Russell 2000 up 2%, semiconductor up 2%, transport almost up 2%, banks up 1%, energy almost 2% there, biotech's up 1%, emerging market about 1%. So three most prominent indices such as NASDAQ and Dow and the S&P, they are flat today, right? Because when you turn news, CNBC, they have NASDAQ and the Dow and the S&P displayed, right? That's that three main indices. Everything else is up. And so I thought that was interesting. And I still think there's a psychological reason behind it, right? Again, whatever is most popular is not always a good thing in the stock market, right? You never want to chase, you never want to go after what everybody's going after. It's interesting because I was reading this article how so many people lost money trying to YOLO long on GameStop at the top or near the highs. And some people actually still argue, bro, there are a lot of people made millions, man. Few people actually have made some money. But just like gambling, just like going to casinos, you will have few people making money in that place, but 95% or more will lose money. Everyone who YOLO'd on GameStop after the fact, when everybody was getting into it, majority of them lost money. And what I'm getting at is, it's just like, I think, because, what I've noticed just recently is that, a lot of these stocks that's been making a big move in 2020 after COVID decline, like Facebook, Amazon, Microsoft, Apple, what are some other ones? Netflix. And a lot of these stocks been lagging last couple of months. And because those stocks takes, they're the one who kind of takes up so much on these large tech stocks. And so maybe that's the reason why we're seeing, last couple months or so, just been really grinding, not making a move. But what I've realized, some of these lagging stocks been going up, right? I saw today Baidu up 14%. A lot of bank stocks are up 3 to 4%. A lot of transport stocks are up quite a bit. Semiconductors been killing it. If you haven't looked at semiconductor, right? Semiconductors been going up and up and up and up relentlessly. And a lot of those semiconductor stocks are not very popular. Some of those tickers, you're rarely gonna see anybody reporting on semiconductor index, right? And obviously Russell 2000, the small caps were lagging horribly in early, after COVID. Same with the banks, they all caught up. And even if you look at this year-to-date performance here, just looking at from January 1st till today, you can see semiconductors leading and energy is leading, biotech is leading, emerging market is leading, and Russell 2000 is leading. Here, I gotta put it like that. Russell 2000 is leading, but NASDAQ, not so much so far. Dow, nope. And S&P 500, not really. So a lot of these lagging stocks that didn't make a fast move earlier on, it's moving now. And this is something that we talked about quite a bit, all throughout last year after COVID. Why chase stocks that are already up too much? Why chase stocks that everybody is looking at and talking about? Why not look for undervalued, unpopular stocks, looking at its potential, looking at where this stock could potentially go down the road. And I think most people don't think like that is because most people are looking at how much gain can I get today or tomorrow or this week, right? And I have to say that the wealthy mentality, and this is something that I preach a lot about to my clients, is that wealthy mentality is someone who looks at, someone who understands how to sacrifice short-term gains for long-term gain. Poverty mentality is somebody who sacrifices long-term gains so they can get their short-term gains. They're worried about their rent money, their beer money, their party money, their drug money, right? Their stripper money. And that's not where you want to be, right? You want to build wealth and you want to build that portfolio in a way that you could have a long-lasting gains, the capital gains, over the years of the time. And obviously, to be able to do that, you really have to understand how to look at this market in a macro sense. So today, in this video, I'll try to do my best to kind of, obviously this is what I do on these weekend videos, kind of look at a much more bigger picture of this market. And for you to able to when I say sacrifice short-term gains for long-term gain, do you know what that means? It means not to freak out when there's these pullbacks. And not to trying to, prepare for those short-term pullbacks, right? Because what happens is if you're too, if you're too focused on the short-term pullback that may or may not come, a lot of times what's going to happen is you're going to miss out big rallies that's going to come later because you're so focused on trying to avoid that short term. So you're not sacrificing short-term gains, right? You're actually sacrificing long-term gains for potential short-term gain. But a lot of times what happens is you're sacrificing both. You're not making money in the short term and you're already missed out on a big rally. So hopefully in this video, I'll try to, make sense of it all, looking at things long-term. Let's check out that, let's go through that short-term or the 65-minute chart first. Follow up, right? We've been looking at this chart we've been doing these daily update videos every single day since the March lows, right? I've always done my videos on a weekly basis. March lows happened, the COVID happened, they locked us down. I got extremely bored, so I started my daily videos, and I got a good review on it. People like it, so I kept doing it, and I still do it. And so far, I plan to continue to do that. So you guys are lucky that I'm not married, I don't have any kids, I got a lot of time on my hands, so I do these daily videos, but we'll continue to do that. Let's look at this daily chart here. So we've been talking about this rising pivot here. We're still holding above it, right? And so, some of the things that I talked about on Wednesday, I was out on Thursday, so you can see that's a Wednesday here, and I talked about how that that gap got filled, and that level might be act as resistance here, and the only way bears can make anything happen at this level is just some kind of a shenanigan down move. And so that's what they got. They just gapped it down one more time here. And so, but it came back down to where though? Here, the rising pivot. I'm trying to do the update since I missed it yesterday. I'm also going to do the update what I missed yesterday. And so that's what I mean, right? Let's give benefit of the doubt to the buyers. And so we stayed above this level. This is where it gapped down to. It is no coincidence where this thing gapped down, started coming down, and it stopped right there. I did not adjust this. It's been right there. And then through that, continued higher. Today we gapped up, hung there. But again, you guys know that when the gap gets filled, then what happens? It's going to act as resistance. But again, it's better Trust me in this, it's better. I know when you saw a gap down, some of you be like, well, Kay said it's better when the gap is filled. How can we see a gap down like this today? Well, you have to understand a bigger picture. You saw how we saw a gap down and bulls pushed up one more time? Do you know, let's say if the gap wasn't filled, and obviously I'm talking in probability type of, statistical probability, right? Obviously, anything can happen. I'm just saying, if this gap wasn't filled, let's just say this thing didn't do this. Gap was open, and then next day, right, it gapped down. Because of this gap is open, and we just saw another gap down, we'll categorize this as a breakaway gap, and then this would have been a continuation gap. You would have seen this market coming down lower, breaking below this rising pivot. I'll give you a good example of that here. There's this gap, right? Bulls brought it up, and this gap was never filled. And then what happened? Boom. Another tankage because this gap was open. But why? Today, we had a tankage here or a gap down here. Bulls bring it up again. Why is that? Because this gap was filled. You see what I mean? If that gap wasn't filled, if another gap down would have broken this below this pivot, we would have seen this thing probably even coming down this support right here, filling this gap, even going after this gap today, And because this gap was filled, there's another gap down, and that's a significant gap down, I think. That's 0.7 gap down, and the market was down as much as 1.2% this morning. And we haven't seen anything like that in quite a bit. So, it would have scared a lot of people out yesterday morning when that happened, right? But again, bulls brought it right back. Why? Because this gap was filled. That gap was filled. That's what I mean. It's better for the bull. Did I say, oh my God, gap got filled, we're going to 400? I said it's better. And so we see another gap down. What happened? It was better for the bulls because we got up again. And then this gap got filled again. So if these two gaps weren't filled, it would have been some kind of a downturn that we might have to face this coming week, might even go down here. Again, as far as the probability is concerned. And you have to understand is that people are always trying to quickly point out like, oh, see this, see that. We're talking, in a sense, this statistical probability. That's what we have in the market when you're trading. Can you see the future? No. Can I see the future? No. Can anyone see the future? No. Right? So we analyze this market. We do our best to refine our strategy. And when I say refine, I mean, okay, what are the probabilities of this market continue to float higher, march higher versus just completely tanking, right? So that's what we're trying to do here. That what I'm saying is these gaps not getting filled. It is why we're still up here at 390. If the gap wasn't filled, today's gap down would have really had some legs. Because a breakaway gap and then a continuation gap sometimes that's a breakaway gap and that's a continuation gap there. You see what I mean? Look, there was this gap down here also. This was back in January 15th. Looks like a double top. How many bears thought that that's it, man? That's a double top for M for murder. And we got the gap down below the neckline. It's done. This thing's going to 360 or lower. On that day, what happened? We got up here and filled that gap. Better for bulls. And then we got right back up. You see what I mean? So I want to continue to give benefit out to the buyers at this point. Let's check out that oscillator here. So oscillator did get crossed back up here. But it's unstable right now a little bit on this oscillator because you can see we got these lower highs going on and lower lows. So unless we see some kind of move to the upside, and right now the resistance is the gap fill area. So it's a little bit hectic situation, I think, for both bears and bulls at this point because we could have a shenanigan on either direction. Shenanigan upside, shenanigan downside. Because last time when the gap got filled, we did see a gap down. Currently, we did see a gap fill, but we did, and then what happened was because we saw gap up in the morning, and then gap got filled, and then we did see a pullback because gap got filled. When gap gets filled, it's going to act as resistance. So are we going to able to, we haven't crossed down though. So this tells us that we still kind of have bullish momentum. And if a bulls want to see control going back to the buyers, we'll need to gap back above this neckline here. This neckline over 390 to 51. Let's go back to the daily chart here. So, and you know what we're looking at just on the 65-minute chart? We're just looking at that. That's it. That little tiny blip, right? That's what we're doing on that 65-minute chart. So it's important. And I'm not saying completely negate or ignore the short term. It's important to understand the short term. You can refine your strategy or entries and exits and things like that. But it's imperative that we understand the big picture. So because then you can able to build your portfolio in a way that you got your aggressive longs, you got some of your mid-term longs, and you also got the long-term longs. So for long-term investors and position traders, this is a level where you could be like, you know what, I want to manage risk. I want to maybe close out some of my aggressive longs, kind of lock in that game. But as far as like a long-term investment stocks are concerned, looking great. I have not closed out any of my long-term investing stocks for months because they're long-term. I mean, some of my index funds I went long here and here and here. I mean, I haven't even touched it. And so looking at things long-term here, you can see that that's the rising pivot, and that's how it perfectly retested it here and here. Never breached it once. You can see been acting as support. All of my short-term moving average is rising. So what does that mean? So we got some of the shorter term here, maybe a mid-term here. We got the long term here. We haven't begun to retest any of those yet. And every time I say that, right, we haven't, we're still uptrend, we're still above those long-term moving average. And some guy would say things like, yeah, we're probably gonna, yeah, it's about time, man. It's due. It's due now that it's going to come down. You can't stay too long breaking, getting above that or staying above that long-term moving averages. That's what I say. Basically, you're sacrificing, your long-term gains you're trying to prepare the top, right? You're trying to I'll give you a good example of that. So you can see here when the rally starts, and this is back in 2016 here. This is a long-term moving average, right? This is in November 2016. It was never retested it until, again, November 2016, all the way till 2018 November. 16 November, 17 November, 18 November. That's 2 years. 2 years, this long-term moving average was not retested. So you're somewhere about here. You're like, yeah, it has to come back and retest. Well, you missed out this entire move. That's how you missed out the entire move, right? Because last time we checked the long-term moving was June 2020. So because none of us can see the future, it is futile endeavor. And just guessing. And that's what gamblers do, actually. Just guessing things, right? You just guess it. It's about time I'm going to hit it. Oh, I feel like I'm going to hit it. Oh, I feel like I'm going to bet on number 8. Oh, yeah, I feel like I'm going to bet on number 10. I feel it. You're not analyzing anything, are you? Right? And so I want to continue to be bullish in the market. And as long as this market continues to be in this uptrend, I would have to say if there is any kind of steep decline, right? Like something like this, or something like that, I would have to say there will be buying opportunities. And I've said this many times, that it will be easier for you to wait for a pullback and buy on those dips versus trying to short and trying to make profit on potentially that correction that you're anticipating. Do you know why that is? Because market can correct through time, moving sideways, and you're not going to make any money off of that. You're actually going to lose money. Or market could keep grinding higher. Or market could pull back a little bit and go up. But only way you can make money is if market sees a kind of a pretty sizable correction, right? So there are 4 scenarios, right? Market could keep marching higher. Market could move sideways. Or market could do these stupid head fakes, right? Like it look like it's going to come back, but it doesn't. That's the 3rd scenario. And the 4th scenario is this thing actually pulling back, right? So what I'm saying is you have 25% chance making money on that short trade, right? Anybody play poker? If you flop, you have if you're looking for a flush, right? You're looking for a flush. You got 2 same suits, your hand. You looked at the flop. There are 3 cards on the flop, and 2 of the cards are same suit as yours. All you need is 1 more same suit, and you get the flush. And flush is a pretty high card, and you probably could take a lot of money from your friends. And there are 2 more cards coming. You have 35% chance hitting that flush. And if you play poker a lot, it's not that easy hitting that flush. A lot of people go after that. A lot of people love to chase that flush, but it's not easy. I'm saying you trying to short here is you have a less chance than hitting a flush because you got about 25% chance making it. Let's go to Russell 2000. The reason I only chose Russell 2000 today is I don't know where the top is. You don't know where the top is, you know? I do have an index fund on Russell 2000 that I've accumulated back in near the lows. But I don't have any like aggressive longs on the Russell 2000. I've closed it out like everything year and year. Like I had triple shares on the Russell 2000. I also had like some call options. So the reason I'm bringing this up is because like I think last time when I said this and when I saw that short term movie, I was like, I don't know where the top is. I don't know. I mean, I just wanna, as long as we continue to move in this way, I wanna continue to give benefit of the doubt. And then it was last week. It looks like we're still above the short-term moving average. And so I don't know what else to say, man. I don't know where the top is. So I want to give benefit of the doubt to the buyers. But at the same time, you must manage risk. Managing risk doesn't mean you're calling the top. That's not what managing risk means. Right? Managing risk means, like I told you, I've closed out my call options. I've closed out my triple shares, right? Because it looks like we got up quite a bit. But there are a lot of long-term stocks that I'm holding that is part of the small cap family and my index fund. I haven't touched them. Because if we do see a steep pullback, I might even thinking about adding more. But I haven't touched it, and then now we're back here, and Russell 2000 is up 2%, and the thing about this human emotion, and the way our psychology works as a human being, what's happening right now is people wants to short things. Because especially, and these are not long-term investors, they're not long in the market, they're just bored. They're just bored that they're not making any money, and and S&P hasn't gone anywhere. So they see that Russell 2000 is just going crazy, right? Same with the semiconductor. Let's actually put semiconductor here, right? These guys been going crazy. So it's like, what most people say is, this won't end well. What goes up must come down. That's not 14% year to date on the Russell 2000, 15% on year to date on semiconductor. S&P is 4%. Look at the short-term moving average here, here, and then it came down to my midterm. Oh, just found support there, and then another short-term. How many people do you think thought that this was top here? Like this, didn't work out. And so they think, well, yeah, semis, or the Russell 2000, they must come down. I could already see so many people trying to short this. And out of their surprise, they just keep making 2% runs. We see these very, very short-term moves. Well, I'm not saying go long here, because I wouldn't go long there. I'm not saying go long. Who would go long up here? You should have been long already some of these levels and hold through it. Your long-term investments. But if you had some of your aggressive longs, some of your call options, after you make some move, you close them out. This is why it's important that you have in your portfolio. And that's, at least for me. I mean, obviously, I can't tell you how you should be trading, investing. For me, what I found out, what works for me is I like to have those aggressive longs, and I would like to have some of those medium-term longs, and I also like to have these long-term longs. So then when we start to see stuff like this, I'm long. I'm just going to keep riding. And so, well, aren't you scared, Kay, that this thing's going to pull back? So that's the difference. Remember what I said? I'm willing to sacrifice short-term gains for a long-term gain, right? What if a lot of people thought, like, I'm going to explain that to you about, sacrificing short-term gains and long-term gain. Let's say you're shrewd. You're value investor. So on semiconductor, you went long some of these levels. You didn't catch this perfect low, but in your analysis tell you that these are some good levels for value investing. So you started buying, right? And then when this thing got to the when this thing got to the all-time high level, and you thought to yourself, yeah, I don't know, this thing looks pretty extended, and then you start trimming, right? You start trimming here. So because you're scared that this is going to do this, right? Or you thought this was going to be a double top. And then when this thing started going up here, you start what? Closing out almost everything, right? And you are pleased with that short-term gains because, you got into April and May and you close out in July. So that's about 2-3 months. I kind of look at that shorter term. That's really not a long-term investing. A little bit of maybe a position trading or something like that. And so you close it out and you're extremely happy with your gain, right? And then afterwards, you're looking for, semiconductor. Again, I'm just using this as an example, but it could be anything. Any stocks or any sector, whatever. And this thing, you decided, I'm going to wait. You always say, okay, I'm going to wait till this thing coming down to maybe 135, 140 or so. I'm going to reaccumulate. That doesn't happen. This thing goes up here and pull back. There you go. This is going to really start coming down. That doesn't happen. So what happened was you made this much gain, right? But what happened was you missed this much move, right? So you sacrifice your long-term gains so you can gather your short-term gains. So you sacrifice this so you can get that. And I know, it is all, subjective. I get it. Okay, what if this, what if that, what if we got into what if we got into Great Depression? What if, right? And again, we're here in the market, we take risk. We analyze and we bet, right? We refine our strategy, right, with our analysis, and then we bet. So I'm talking in a sense in this market how I played it, and that was my mentality. I do not want to sacrifice, long-term gains for short-term gains. I rather sacrifice short-term gains for long-term gain. When I say I'd rather sacrifice short-term gains, I'm willing to go through some short-term corrections so that I could get the big long-term gain. So again, so what I want to do is I don't care this thing coming down here. I really don't. I at this point for me, just the way my portfolio is built, if this thing goes higher, great. That's great because I still have many longs and I like to ride them to the upside. But let's say this thing do this, right? Great. Since I'm out of my call options, I close on my triple shares. Maybe I'm gonna start thinking about getting into call options again on Spider. Maybe get back into some of those triple shares. But remember what I said. There are 4 different ways the market is going to. Market keep going higher. That's one way. Market can move sideways because it can correct through time. That's one way. It can do little head fakes, like make it look like it's gonna pull back, but it doesn't, like a little bear trap, right? That's another scenario, or this thing tanks. So we got 4 scenarios. Shorting, you got 25% chance of making it work. But my long-term investments, I have what? I have 75% chance of making that work. So which one do you want to, which one do you want to play? Which percentage? This one or 75%? Which one? And that's what I mean, right? Again, you're a day trader. You like doing things short term. Keep doing what you do. I'm just letting, because this is what I do. And this has been working well for me since 2014. And so I'm telling you what worked for me. And you can use that information however you want. We have my short-term moving average here. This is current support. We got my midterm kind of hanging around here. That rising pivot, we're well above it. And so I just, looking at things long term, I just want to continue to give benefit of the doubt to the buyers. I wouldn't be too hang up with this anymore. If anything, that should give you great confidence that we just saw some crazy 35% like downturn and market just shrugged it off like that. That tells you the strength of this market. I mean, that's how I see it. Of course, it doesn't matter where we are. Market is going to have its ups and downs, man. So let's continue to give benefit of the doubt to the buyers. If you're a long-term investor, if you're like a position trader like myself, nothing to worry about. Keep holding your longs. If it keep going higher, great. Keep holding it. If we see some pullback, nice pullback, decent size pullback. I'm not talking about like a 1%, decent size. If this thing comes down, maybe retest this, maybe coming over here or something like that. Maybe you can think about accumulating. But sometimes what happens is S&P could have like a 1% pullback, but there's some sectors, some stocks could be like, like it came down a lot more. And then you could maybe start thinking about adding on to those. Let's go to Vixx here. So Vixx is, I still see so many people online always so concerned about Vixx. And so don't worry so much about Vixx. Always your main analysis should come from the indices. Vixx should always be a supplement. Like I said, earlier this year that there's this gap here that wasn't filled. It's going to take probably this entire to fill it. It's going to fill a little bit, go up, fill a little bit, go up, and it's probably going to do that. Sooner or later, we may see another pop or so. Nobody can. It's roll a dice. Go to casino. If you want to trade Vixx, just roll a dice. Go to silver here. Silver's been lagging. There's been a lot of concerning voices about gold and silver. And the reason, the thing about it is, a lot of people, this is why you don't want to chase, right? So market, gold and silver made a big move, and then it's starting to get a lot of attention, right? And this is what happens. Once it gets too much attention, there are too many people around, it becomes chaotic, right? Go to Costco on Sunday after church time. It's chaotic. I don't ever want to go to Costco on Sunday after church time, right? Go there on Monday, like 11 a.m. It's luxurious shopping experience. Nobody there. So I like to buy things. I like to go look for, undervalued stocks and setups. And so, and that's kind of what it's just been grinding. I know GLD is a little bit more. We'll look at gold today too. Also, somebody asked me about that on YouTube or Twitter. I forgot. So you can see gold it came down, made a new lows now. So we initially made equal highs here. That was a little bit of positive sign. So I was looking for that higher low now. That didn't give you that. But the thing about it is, silver usually likes to lead. So silver's giving us a little bit better idea here. We got these double bottom, and we got the higher low. We got the higher highs here. And then we're still in that trend. Gold is just kind of still consolidating. And this is, so if you chase that up here, yeah, it's going to exhaust you. But if you bought and you are here or even here in your long term, it's not bad. And what I would do is if this thing comes down lower, maybe coming back down here, so I might even, potentially maybe adding to it again for long term. This is any short term traders, you didn't make anything over there. If anything, you just lost money trying to time it. So it's been really, and that's what's going to happen is the market makes a market or gold or ETF or any kind of index. It's going to make a big move one point. It's going to get too crowded, and at some point it's going to come down. Especially gold gets a little bit more volatile, and then people like want to chase it up here, and then it's just gonna, and it's been what, how many months now? 9, 10, 11, 12, 1, 2, almost half year. It just hasn't done anything, and this is gonna exhaust a lot of people. And once this market really punish those who chased it at the top, once they're out, and then market is going to decide to do it. But slowly, ever so slowly, this whole market will give us a hint in here and there. And so for me, when I see silver in this area, with these higher lows, higher highs, I'm kind of looking a little bit more. It's starting to look a little bit more positive for me as I look at silver. How is it for now, as of today, at this time, that what I can see. So I want to stay bullish in the long term on gold and silver. We just haven't seen any kind of a real a price action that can tell us that this thing is ready. Something like this we need to see higher low. We don't have a higher low. We got equal lows, and we still got lower lows here. We don't have higher lows. That's what we need to see. We need to see higher low here. But again, silver does have higher lows, so that might be something. One last one here with Grayscale and let you guys go. So Grayscale, Grayscale got the rising pivot right there. That's a perfect rising pivot. Came right down to it. My midterm moving average is there. Came down. Look at how fast it got back up here. So don't chase. Buy it here. Buy it here, right? We talked about last time why this was a good level to buy. Look at this right here. Perfect pivot, right? So don't ever buy when everybody's buying, man. Buy it here. Buy it here. Buy it here. And what you do is you sell here. Oops. You sell here. It doesn't have to be perfect top, just somewhere after this make a move, right? So buy here, buy here. I'm not talking about right at the low. Just somewhere here in that vicinity. Here, somewhere here. And then if you bought it here, start selling some here. Start selling some here. I haven't sold any because I did buy here. I preach what I practice, so just let it go. I haven't sold any yet. I'm thinking about it. If this thing, you know what I did though? I'll let you guys go with this. I did this. So I did a Fibonacci like that, but I could do another one with the shorter term. So I used this one and this one. That's like a longer term, but I could use this one and this peak, this valley right there. So then I could do a little bit shorter term. And sometimes they kind of intertwine, they kind of coincide. This time it doesn't. So I'm thinking I want to start to close out some positions somewhere here, right? So if this thing start coming to about 60, I'll close maybe half or 1/3. Start going to here, another third and half. Start going to 70, I'm all out type of deal, right? Never ever chase. Buy when there's fear. Sell when there's greed. But again, it is extremely difficult said than done, right? It's easier to say it. Everybody recite it. Everybody share it. Buffett said it, but it's hard to do. When there's fear, you must act. At least strategize. Don't strategize Grayscale now. Like you want to scale, oh yeah, that's what people do. Oh, Bitcoin's up here. Yeah, man, Bitcoin looks like great. I saw this. Somebody sent me this video. Somebody sent me this video. One of my clients sent me this video. This guy, he quit his job. I'm sorry, but nobody should be doing. That's what I'm talking about. He quit his job, and then he put his entire life savings. And he took money out of IRA. You get pretty hefty penalty for that, for taking money out of there. He just like, I don't care. He took money there, and he put everything on Bitcoin. and he's like, F the government, I'm not gonna pay taxes. I think, didn't people forget what happened here? There's so many, like, I was watching documentary on YouTube how many people lost their entire life savings because they did this somewhere here in YOLO gamble type of, bet like that. I don't know why people do. I'm not saying that's what's gonna happen, but you trade the market like a casino, then that's the percentage of winning probability you're gonna get, which is 5% or less winning probability. You're trying to change your life overnight. It's not gonna work. Anything in this world, anything great that came about in this world, it took time, persistency, consistency, like persevering, right? And going through ups and downs and tough times, learning from your mistakes, persevering through the, hurts and pains and struggles. I mean, anything great came about in this world with years of training, going through stuff, learning through those mistakes. But I don't know why so many people just want to hit that jackpot, just want to hit that lottery. Go on YouTube and find out what happened to those who actually won the jackpot and lottery. They went broke. They lost all their money. They say that the winning a jackpot or winning a lottery was the worst thing ever happened. Some of them are a drug addict. Some of them died. Some of them are in rehab. Some of them is in jail. Some of them working. They're homeless. You guys know what I'm talking about. I just wish that more people would be wise, trading this market and know that it's no game, it's no gamble. It takes time to learn the game. I'll say this here, slow and steady always wins the race. Slow and steady, right? Consistency always win. Consistency is better than someone who's trying to go after 300% gain, 200% gain, 500% gain, right? All the things that you see on social media, somebody showing off their 1,000% gains, they're not showing last 10 trades that just went to nothing. People risking all kinds of money is because they're in a hole. I don't know, if you ever played poker, people know this, that once you start to lose money, any poker player, once you start to lose your chips, they tend to risk more because they feel that they need to come back up, and they'll get into things they shouldn't have get into. They're not as composed, they're not as, strategic anymore. It's just all emotion at the time, and that's how you go bust. Enjoy your weekend. I'll come back for you, and good luck trading next week.